Hello, this is Steve Malone, Compass FX. Hope you're doing well today and you're getting some good trades. Let's talk about reading the charts and why some chart patterns don't work out as we expected. If you take a look at the Aussie dollar today, this morning in my live active trade room, and if you're not familiar with the active trade room, you can look over my shoulders. I trade the market every morning, Monday through Friday, during the open of the U.S. session. It gives you an opportunity to see how I trade the marketplace, and we have a great community of traders. We often share different ideas about what we're looking at the marketplace. So if you haven't checked it out, go to www.compassfx.com/Forex Signals. Simply register there. The room is free, and come in and join us during the open of the U.S. session. So during the active trade room this morning, we had talked about some potential setups. One of the potential setups we had talked about was a double top pattern seen in the Aussie dollar. The Aussie dollar made a nice move up, had come back down to a midpoint, and rose back up. And so we had a double top here. Also taking a look at the Traders Dynamic Index at a high, a higher high, and then a lower high. And that lower high with a downward neckline led me to believe that, hey, here we have a potential head and shoulders pattern, a double top. What we need to see is this come over, break, and sustain the break. And we need to see a close below the price action channel. Also, I had mentioned in the live active trade room that this move right here, we'd have to see a break of the trend line. Now, we got a break of the trend line. We didn't get the follow through that we had expected here. So technically, you're thinking, shouldn't this go? Shouldn't this make a move? However, there are times in the marketplace you need to be aware of the fundamentals in the market, and you need to be aware of the commonality between some of the currency pairs. The Aussie dollar is a particular pair to where it has an opposite currency pair that it trades against, and that's the dollar Canadian. And the dollar Canadian today had an interest rate announcement that remained unchanged. And with it remaining unchanged, the Bank of Canada elected to keep the Canadian dollar at 1% interest rate. Well, this strengthened the Canadian dollar against the US dollar, and we saw the dollar CAD roll over, and this is a sign of Canadian strength. Well, at that point there was a chance for the CAD to push back up, but it couldn't make it, and it fell down pretty hard. It stayed in this little tight range, looked like it was going to try to make a push up right here, and then just fell over and continued to grind lower on that Bank of Canada news when we had more hawkish tones out of the Bank of Canada members and their comments regarding the direction of the fiscal and monetary policies with the Bank of Canada. So this making a push down, look what it looks like on the Aussie dollar on an hourly chart. The Aussie dollar on this hourly chart, strong push up. As a matter of fact, something to look at on the hourly is the fact that the market baseline here looked like it was going to give it up just a little bit right there. It's kind of going a little bit flat and started pushing up right about the same time we had this double top, and right at the same time we have that Bank of Canada interest rate announcement. As a matter of fact, taking a big picture view of this, it looks like there's a double bottom type setup on the Aussie dollar, and there's the potential for the Aussie dollar to make a push all the way back up here to these highs right around that 450 level, seen with this move down, a bounce to a midpoint, down low, and another bounce back up. So taking a look at the Aussie dollar 15-minute chart again, what was some of the things we could have looked at to tell us technically that this wasn't going to roll over? And again, this is important because oftentimes we get so tunnel visioned on just a technical pattern, we forget about the fundamentals. So be aware of the economic calendar, know what's forthcoming as you trade. Realize that a technical pattern, everybody sees it in the marketplace. And sometimes what will happen is the market will favor that technical pattern for a short period of time to encourage traders to step in. Then the market gets turned the other direction and traps the traders. So the traders who got in short here were trapped. And then it pushed up and they got stopped out. And that's the easy money for a lot of institutions, is for, in this case, for the sellers to get trapped. The market turns and pushes up. Could there have been a way for you to prevent that from happening? Well, yes. Not only did we break this and show a potential sign of the downward, we wanted to see a actual close and a sustained movement below the price action channel. There would have been plenty of movement down to catch something. You don't have to be the first person on the bandwagon. Sometimes the first person on the bandwagon is the guy that gets stopped out on the opposite move. But one of the things I look for, though, is a close on the other side of the price action channel, and I look for a follow-through on the Trader's Dynamic Index. The green came down, but more or less it tried to break it, couldn't do it, and bounced up. One thing to be very cognizant of is the market baseline, the yellow line. This market baseline represents the overall trend of the market. And what we look for is the market baseline to go flat or to turn in the direction that we're looking to trade. Now, in this case, the green's coming down, but the yellow's going up. So it would probably have been best to consider for a moment that if this closes below, it might go back up, test, if it's going to go higher, test the break of this little range we're in right here, and then drop and get in on that second move to the downside, or enter in on a close below the price action channel with a follow through of the green breaking the yellow and the red starting to come over and break the yellow as well. That would have been more favorable of a setup to trade. So just be aware that oftentimes you'll have a setup, a technical setup to trade a certain direction, but you won't get that follow through due to a fundamental event in the marketplace or a news announcement, and follow what's happening not only in your smaller time frame, but look in the larger time frame and look for what's showing up in the larger time frame. The larger time frame came up, showed a double top at this midpoint here, and we were above the price action channel here. For it to fall and continue pushing down, this would have had to turn over. We would have seen some movement down. So really the bigger picture was against the short move down, and it pushed on up, and there's the possibility of it to push higher if the CAD continues to drop down lower. So long story short, when you see a technical pattern in an intraday chart, go to your higher time frame charts. I like to trade on the 5 and 15 minute charts, therefore I'm looking at a 1 hour and a 4 hour as my big picture and what the current trend is. From that standpoint, I look at what the sentiment in the marketplace is doing, and I look at any correlating currency pairs. So in this case, if I'm watching the Aussie dollar and seeing what it can potentially do, I'm also watching the dollar CAD. The dollar CAD is not going to make a move like this without the Aussie dollar making a move like this. Rarely do they move in the same direction. So when the dollar CAD started making its move down like it did today, then I was prepared for that Aussie dollar to push back up, and I did not favor a short after the Bank of Canada's interest rate announcement. Well, folks, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Take care. Bye-bye.